Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Uber reported first quarter 2023 financial results this week, and they look pretty good. I think the general story here is more people are using Uber, and the company is really leveraging its position in the market as basically the winner take all in ride sharing to both increase prices and also increase the percentage of each trip that the company is taking. So I want to dig into the numbers and show you exactly what's going on. My name's Travis Hoyam. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content, and let's get right to the results. This is the earnings release here, and you can see some high-level numbers. Gross bookings grew 19% year over year, 22% on a constant currency basis. Operating cash flow was actually positive of $606 million and record free cash flow of $549 million. So that's really positive news because Uber has been a cash burning machine for over a decade now. So starting to generate positive cash flow, that's a really good sign. I want to go down here to some of the metrics because I think this really tells the story of what's going on at Uber. Monthly active platform customers, so the number of people using Uber, up 13% in the quarter. Trips up 24%. Gross bookings up 19%. Revenue up 29%. Look at the trends here. Revenue is growing more quickly than trips or users. So that means that Uber is generating more revenue per trip than it was previously. So what's the reason for that? Well, if we go down here to one is that the mix is a little bit different. You can see that mobility bookings are up 40%, whereas delivery bookings were only up 8%. And then you see the increase here in revenue. So this top one is bookings. The second one is revenue. Mobility revenue up 72% and delivery revenue up 23%. What does that tell us? The take rates, which is right here, are going up at Uber and up really significantly. 29% in the most recent quarter for mobility, up from 23.5%. Delivery up to 20.6% from 18.1%. The way that Uber works is if you spend $10 on a ride, Uber doesn't generate $10 in revenue because a chunk of that revenue is going to go to the driver. In this case, it looks like about 71% of that money is going to go to the driver. But a year ago, it was 76% of the money was going to go to the driver. So Uber is increasing what's called the take rate, or the percentage of each trip that it's taking as revenue. The reason that it's able to do this is its competitors like Lyft are getting weaker in the market. And so Uber has pricing power now over its suppliers who are drivers. This financial improvement in the increase in the take rate is disproportionately hitting the bottom line, or adjusted EBITDA. So that's what this segment is right here. You can see that over the past year, adjusted EBITDA overall grew from $168 million to $761 million. That's a massive increase for a company like Uber, and it's because the company is leveraging those price increases that are hitting the drivers, basically. The general trend here is that Uber's position in the market is getting stronger as its competitors are getting weaker. That means that it's able to implement pricing power over the people that are supplying the rides and that you're actually interacting with as an Uber user. This is a bit of a double-edged sword for Uber. As it increases prices, those prices are going to eventually go on to customers. So if you're a restaurant doing delivery, eventually you're going to raise your own prices so that you can make enough money to survive. Same thing goes for drivers. If you're only making 71% of a trip's revenue instead of 75%, you're going to maybe be a little bit more cautious with taking certain rides and maybe effectively demand a little bit higher rate as a result. So there's a limit to how much Uber can push these price increases and increase that take rate. But that's the reason that revenue is going up as much as it is right now. I do think that's a positive for Uber. It gets the company to a more sustainable place. But we'll have to see over the next few quarters how far it's able to push this and if it gets pushback from its suppliers. But that's the reason that Uber's quarter looked really good. I do think it's definitely a positive for investors that Uber's getting to a more sustainable place. That means that a lot of its rivals are getting weaker, and that seems to be continuing. And there doesn't seem to be a lot that they can do about that. But at the end of the day, that's great for Uber. What do you think of the results? I'd love to hear your comments in the comment section below. Don't forget to follow Rive Investing. Thanks for watching, everybody. I'll see you here next time.